Happy Tuesday out there, Team 42. It's your skipper here, Darius to present our macro minute for Tuesday, October 29th, 2024. As always, we'll start with the executive summary from today's lit-off morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are: what does part one of the QRA signal about the outlook for U.S. liquidity? Is spending on AI still robust? And is the U.S. labor market still resilient? Our answers are: Part one of the Q4 QRA suggests the U.S. Treasury will attempt to incrementally crowd out the global private sector and drain U.S. liquidity in Q1 via a $277 billion increase in net marketable borrowing and a $150 billion increase in the TGA. This compares to a revised $216 billion reduction in net marketable borrowing and a planned $186 billion reduction in the TGA in Q4. We do not believe the Treasury will be successful in its attempt to incrementally crowd out the global private sector and drain U.S. liquidity in Q1 due to what is likely to be another lengthy debt ceiling negotiation in the Senate. Investors should expect roughly $700 billion of TGA spend down in the first few months of 2025, which will be a boost to U.S. liquidity. Alphabet Google reports earnings today, kicking off a week that features results from 5 Magnificent 7 names and companies representing a combined 42% of S&P 500 market cap. Robust productivity dynamics continue to underpin our bullish bias on the U.S. corporate profit cycle. There has been considerable slack created in the labor market, but that slack has come from a reduction in job openings and turnover, not outright firings. This is the first time in the history of these time series where firings have materially diverged from job openings and turnover. We have hypothesized that labor hoarding will persist until the corporate profit cycle breaks down. It is currently in an accelerating upturn. Transitioning to a 42 macro dashboard here. As always, we'll wrap up with a question from our community. This one really isn't a question. It's just some kind feedback we'd like to share from one of our clients. This is the best around the horn thus far. For those who may not be new or may not be familiar, Around the Horn is our weekly webcast where we go through about 50, 60 slides of material in about 30, 45, sometimes 50 minutes, kind of unpacking all of the critical evolution of our quantitative signaling, as well as the update, the evolution of our fundamental research themes in the context of all the data that's been reported that week. So getting back to the statement, so this is the best around the horn thus far. This is the best around the horn I've seen since I've been a subscriber, period. Almost a macro scouting report quality, which is our monthly deep dive presentation. It's quite a bit longer that Around the Horn subs got for free this week. In the financial landscape, shedding the traditional dogma that bonds are must-have in every portfolio is what separates the top-tier firms from the pack. The move speaks to DD's expertise and discipline, a must-watch. I find myself saying the same thing every Saturday. Somehow it continues to get better. So I just want to say I'm really humbled by this super kind feedback. We have a very high favorability rating amongst our clients here at 42 Macro because we're doing exactly what we intend to do for them, which is help them maximize upside capture in bull markets and minimize downside capture in bear markets. And one of the processes and procedures that we've implemented and to do that is to constantly listen and incorporate feedback from our community and from the markets themselves. Obviously at financial markets, if you're doing the same thing that you were doing 10, 20 years ago as an investor, it's probably not working today, in so much that if you got your head buried in the sand and you're not listening to your clients in terms of the solutions that they are demanding as a research provider or even as an asset manager, then you're probably not going to be having particularly good results in your business. So we're really proud of what we built here at 42 Macro. Everybody's invited to join the party. Our clients are fat, happy, and making money, or their portfolios are fat and happy, making money. Hopefully everyone is healthy as well. So we'll wrap it up there. Darius Dale presenting our macro minute for Tuesday, October 29th, 2024. Everyone have a wonderful day. We'll catch you back here tomorrow. Cheers.